Okay. Apple's doing some interesting things. You can see the algos working right here at the 350. I'm going to go ahead and start the stream up. Clear my throat a little bit. Make sure everything's working. Looks good. I put this up here, put the stream on there. We can actually communicate in everything. I'm okay with that if you want to write in there. Because I don't think people notice the stream without it. Holy crap, you posted a lot. Can you hear me pretty good? Everything good? Oh, wow, that's really echoing. I'll turn my sound down over there. Should be coming through. No, I don't have music on right now. I was just sitting here watching Apple, and right at 350, it shot up. Hold on a second, I gotta do some things. Asshole. I knew they were going to do that. playing games. Yeah, I turned it back on. Had to load up some different accounts. Yeah, look at that. Look at those games right there. Right here at the close. TV's not streaming. Maybe it's because it's not 4 o'clock yet. It says it's live. Hang on. Well, I don't want to. Are you sure you can't see anything from the stream? Hold on. It shows I'm live, but TV's not showing anything. What's it? What do you see? Try to do a refresh. Try to do a page refresh. I wonder if it's because I have it scheduled for later. Let's see at 4 o'clock if it comes through. It says live and streaming on my end. Was it streaming? Okay, there we go. Okay, good. Okay, thank you, Falco. We're gonna get started in just a second. Just watching some of these games they're playing here on Apple. It's option expiration. I thought for a second what they were going to try to do before the day was get it below 170 to wash some people out, but it looks like we're just not going to get very much anything. So should hear the bell here in just a second. $30. This is what I'll do when people start coming in. Want to show this video right here while the music plays for our intro. There it is. All right.
Insurance can be confusing and unclear. One minute your doctor's in network, and the next minute...
It's because I have, I don't pay.
We saw those little posters.
All right, here it comes. You watching? Down, right into the FOMC. Up. Boom. Stop market. Bitcoin. Minute by minute. Moving in lockstep to what a thing to watch. What's up, everybody? If you're coming in, what I'm playing back for you right now is this Wednesday's FOMC, 1400, of course, 2 p.m. Eastern, and that is what we were watching. And it's just the similarity between two assets, the S&P 500 index and Bitcoin, which should be two completely uncorrelated instruments. They just move in lockstep. Yes, that's it. And I noticed this on December 3rd. On December 3rd, it was a Friday, and there was a jobs report that came out. The jobs report was at 8:30 in the morning. And if you're watching the S&P futures, or if you were looking at the SPY in the after hours, you saw that was the moment that price spiked up. And as the stock market sold off, so did cryptocurrencies, which triggered that liquidation spike. And this is the message that I've been, sharing to people this whole time, all through this month of December, is that both of these instruments are following the same drumbeat. A lot. And why do I say it? I'm trying to help people be aware that they need to pay attention to the broader market and not just think that Bitcoin is going to be completely uncorrelated. It's still a risk asset, and cryptocurrency in general. People are getting less risky as this year goes on. So we got a lot to talk about. If you're just rolling in, I'm going to try to look at 3 different chat boxes, run on my Discord. Oh, I need to share my screen on my Discord. That would make sense, wouldn't it? Thank you for telling me. All right, going live on the Discord. And I've got my friends on TradingView. So if you have anything to talk about, this is to hang out with people at the close of a crazy week and talk about whatever you guys want to talk about. If you don't come up with things, I'll talk about what I want to talk about, and I'm more than happy to do that. Let's see, where are we going? There we go. Getting things together. There we go. Okay. So yeah, it has been an interesting week. So let's go back to the key thing of this week. And forgive me if I have to clear my throat a couple of times. I am a little bit allergy sensitive. I don't think it's the Omicron. The Autobots are not coming to get me. Just a little bit of seasonal stuff. So really, Wednesday was, of course, the FOMC meeting. And it doesn't matter if I show you SPY. It doesn't matter if I show you Bitcoin around that time. They all followed the Fed meeting. Cryptocurrency, even Ethereum, everything, every single thing, every chart pretty much looks the same with varying degrees of difference, which we're going to talk about that in just a second. But one of the key takeaways for this week is that we had this big rally, which was very, very interesting to watch on Wednesday. It actually makes me want to stream these events. I'm sure some people on TradingView were streaming them. Yes, I'll definitely talk about Tesla. I am long Tesla right now, by the way. It's been kind of a interesting week as well. So this was very interesting to watch. Now, normally I'm very dismissive of FOMC meetings because it seems to be the job description of the Fed chairman to speak for about 2 hours and say nothing of substance. Because if he actually says something of substance, the market would freak out to one side or the other, and billions, trillions of dollars would change hands. So when he typically speaks and when the meeting happens, not much happens. But this day in particular, I guess the market was poised for some sort of a rally. You had this little manipulation spike, and that's what I'm going to start calling them now. Actually, I'm going to start calling them manipulation spikes, because I had a conversation with a friend this week at dinner, and he talked about this other guru, and I had to learn what a guru was. Guru is a financial guru, which is not what I am. I'm just a trader that likes to talk about markets. This guru has this service that people subscribe and pay for, which, plugging myself, I have a social community that I don't charge anybody for because I don't believe in that. You can find the links in my signature and everything below. His whole premise was telling people about banks and whales and how they manipulate the market to take your money. And if you follow his system, he'll teach you how to beat them at their game. And so I listened. I listened to him describe what this guy talks about. And he talked about how the banks have knowledge of where everyone's stop is. I mean, how often are you in a trade where, let's say, you go long on, say, this, you go long and like right here, right before the FOMC, you buy, but you're only going to give it a little bit of risk. So maybe you put your stop right here. Let's go back in time. It makes sense at the time. You structure a trade like so, where you're like, okay, I'm gonna bet on this going up. I'm gonna play it to the high right here, and I want to give it just a little bit of risk. So we'll play it below this low right here. Okay, you know what? Let's be safe. I'm going to put it just 1 point below this low. If it comes down to here, I don't want to be in this trade. So you play it that way, and it takes out your stop. Oh, they got you. They got you. They got you. Who's they? I don't know who they is. It's a very convincing case to make to people that have been trading for just about under 5 years that people are out to take their money. Yes, because you're trading as professionals, and they are there to take your money, but they don't wake up in the morning and necessarily do things. You kind of screw yourself by not recognizing the games. And once you've been doing this for a couple of years, you start to notice those sort of things. And I came to that conclusion not too long ago. And that's the whole premise of the way that I trade, which is using, the lizard people, exactly. The whole premise of how I trade is looking for these spikes. In fact, I posted this trade just yesterday. This was on Ethereum. I'm revealing the secrets of the manipulation. So you had the rally post FOMC, and it comes up and sets up a high. And then what do you have? You have a stop run, a little bitty stop one right here, but it fits my criteria to set up a trade. Made it very public about this. Naturally, any good trade is going to make you a little bit uncomfortable at the beginning, but I'm looking for something like a 7-1 on this thing, which is crazy. I don't usually do this, but why not? Why not? Yeah, see, gives me a little bit of grief, but overnight, last night, you see what happened. I took a little bit of profit at the 4-1, but again, I used to get stopped out on these sort of runs before, and I complained about it too. I thought the market makers and the whales were out to get me, but eventually I came to the conclusion like, if this happens enough times, why don't I actually make money off of it? And then once you kind of reach that level of understanding about trading and markets, and you don't blame other people, other invisible lizard people that run banks for your losses, and you actually set to making money, that's when you can actually succeed. But if you want to sell a service, if you want to sell people on a trading plan, a trading platform where they subscribe to you on a monthly basis, and that's how you want to make your living, then yes, feed people these stories about Wyckoff distributions and how the whales are, accumulating and whatever else you want to say. So that works. So Got a long list of things to talk about, but since people were joining in, we'll start talking off the top here about some of the questions. Let's talk about Bitcoin and Ethereum. If you're just joining my live stream on TradingView, I make it a point to put out my ideas as I see them, as I talk about them. I'd get a lot of flack from people. It's funny that you can make a living as a journalist talking every single day about how the stock market is going to crash. But if you try to put out there that cryptocurrency is in a confirmed bearish trend, people go absolutely nuts and don't know how to handle it. So I put this out. This is a follow up to something I did at the beginning of the year, where people were wondering when the trend of Bitcoin would end. This was back in January, February, and what I basically said then was, when price crosses below the cloud and you have momentum at the same time, that's when you have a bearish trend. And then on the inverse is true, when price gets above the cloud. We're using Ichimoku, by the way. When I'm doing like an analysis of price, this is what I use. When I trade, I use the spikes and 50% retracements. But if I'm going to do an analysis, because people ask, this is the way that I've trained for years to do it. And so on this liquidation spike that we had following the December jobs report, it actually got Bitcoin into a confirmed bearish trend. It's below the cloud, momentum's out, and it's just continue on. The probability is extremely high that we're going to retest this liquidation low. I'm never going to say something's 100%, but it's really damn high. It's really damn high that we're going to come down to 42,000. And the same is true of Ethereum. Now, what's interesting, if you look at the difference between Bitcoin and Ethereum, while it's poking its head out of the cloud price here, momentum is still above the cloud. Ethereum's actually stronger. Ethereum is actually holding its ground in all this movement. But again, the liquidation low is really the key, because if you get price down to break this low, likewise, because basically all the Chicago momentum, lagging span, whatever you want to call it, is the closing price shifted back, whatever bars you have set to, that's going to get it free if it gets down there. So by multiple ways of analysis, if we break the liquidation low, it's bad. Well, unless you're bearish, unless you're a bear like me. I don't want people to lose money, but I'm not, and I don't. By me shorting, it doesn't make people that are long lose money. I'm just reading the market as I see it and trading accordingly. If you're new and all you know how to do is put your money into Coinbase and buy cryptocurrency, then you really need to expand your horizons. I'm not trying to win any favor. I'm not trying to get you to subscribe to a service. I'm telling you honestly, you need to learn something about cryptocurrency, and you need to learn how to short. Bottom line. If you want to talk about it, go in the Discord. We talk about it. I've mentioned before. So, yeah. You have to learn how to hedge your existing position. If you want to hold cryptocurrency, I hold cryptocurrency. If you want to hold it, you have to be able to put some of it on exchange on margin, and then you have to short against it, and you have to hedge for the downside. The one thing I don't want people doing right now is dip buying. Now, I'll preface this by saying that don't take my financial advice. I'm blah blah blah. Everybody always say that, but I just don't want people to see every little red bar on the daily as a buying opportunity. A real buying opportunity is when people are no longer optimistic about it. This is the cycle of human psychology. Too many people are still too optimistic. There's in fact, I was having this discussion earlier. When I start talking about my shorts, I had a short that I posted right before the December jobs report. Let's go find it. Don't need Ichimoku for it. Right before this crash, you had another one of those manipulation bars. Right there. Shot up, triggered people's stops to the upside. It also happened to be at a 50% retracement of this move right here. A beautiful, beautiful setup that I really like to see. Got in, and that was the crash right there on the jobs report, 8:30 in the morning. 8:30 Friday, December the. Why does crypto respond to a jobs report? Why does crypto care? It's because it's looking at interest rates. All these gains, these valuations of cryptocurrency come on borrowed money at low interest rates. That's just the fact. It's just the nature of things. And so, when I post this and people are very mad at me, or if I'm talking about how I shorted Doge, here we go. There was another one here on the 12th with Dogecoin, another one of these manipulation spike bars right at a 50% retracement. And then, of course, Elon comes in and makes some tweet about Tesla taking Doge to buy it. And it kind of pissed me off because whenever I take a trade, I'm going to let it come to my reward, which was right around these right here. I was basing off the spike, that little inflection point right there. So got out around here, this range, and I left some on. And of course, that some that I left on got stopped out because Elon made some tweet. Oh, well. But, it's not because I'm super smart. It's not because I know something that anyone else doesn't know. The reason I'm taking short trades and the reason they're winning, to me, in my estimation, it's not because I'm better or anything at all. It's because bearish trades are working. And in a bull market, bull trades work. In a bear market, bear trades work. It's really just kind of that simple. It's really just choosing the trades. And sometimes you don't know if you're in a bull or bear market. Sometimes just the fact that I have 3 bearish trades over the last few weeks that all worked out, 3 for 3, that tells me what kind of a market we're in. If we were in a bull market, I'd be getting crapped on. So that's just my logic. That's my logic. That can change at any point. 1 second, I've got a dry throat. You got something to look at, let me know. All right, let's read some of the chats. Don't I think that the swing low on the daily will hold on Bitcoin? I'm not sure myself which way it will go right now. Bear markets and BTC can last for years. Yes, they can. Most crypto people don't understand how rates impact anything. No, they don't. That's why I'm kind of making it my quest to tell people. A lot of people, they tend to be young. That just got into crypto. They just want to ignore all the stuff like boomer stocks. They don't want to consider that the broader economic factors are actually playing into it. They're happy to parrot the narrative that inflation is rampant and the only thing that should have any value is cryptocurrency because it's naturally deflationary, at least Bitcoin is. But they don't really take the next step to understand why their profits are up. Like, why is the US dollar value of what they bought going up? It's not because they're geniuses. It's because there's a lot of dollars being printed, and those dollars have to go somewhere. They can't put them in a warehouse. The rats will eat them like they did for narcos. They have to go into asset prices. And so that printing is going into your crypto holdings. And when that printing stops, your crypto holdings will stop going up so much. But that's not what people want to hear. Yeah, I mean, I'm glad there's some people that have taken the chance to look back on some previous price trends of the last few years. And bear markets in crypto are not fun. Actually, this week I was talking about. I'll answer your question. When you trade BTC futures, say on a 5-minute chart, what's the max stop loss? Good question. Good question. Let's just look at. I haven't done any Bitcoin here for a while, but let's look at the Ethereum. So here's what I did on Ethereum. The basic premise is this: I'm looking for these manipulation spikes. They need to happen at a retracement level, like you can call it a fib or something like that, or at a major high or low. They're basically a statistical aberration. I mean, you can see them very clearly right here. And then, I measure it using ATR, and that kind of gives me a little bit of a filter. And you see the cross I have drawn, that's just from an indicator I made on TradingView. What I want to do is once that bar closes, I'm going to look at this red line, which is basically the Tenkan from Ichimoku. And I'm just going to have my stop just above that spike. Because ideally, in theory, all the people that were trying to play the breakout, all the people that were getting their stops taken out, all the people that are subscribing to that service that the whales are, screwing them over, they're all out. Or the people that played the breakout and they're getting faked out are now sitting in a negative position. They've already bought if they were going to bought for this potential breach of the high. Okay. So I really don't need my stop to be much higher than that. That's the fundamental premise of it. Okay. So as far as I don't base a certain point number. I don't think that you can say I'm going to give my Ethereum stop 20 points or $20 or $40 or $100. You can't. That's not how I've ever operated. You have to go on what price is telling you, and that's going to be ATR is a really good way to measure that because it keeps you in line with what's going on. Because if I told you my stop is $20, well, what does that mean? It means something very different from Ethereum to Bitcoin. So you have to make it relative to the pair. Pivots, Camarilla, or CPR indicator. I'll try ATR2. Is your target 10x your stop? 10x is ambitious. Hold on. Let me go back through this trade. Hold on. I'll talk about it. So with the stop above here, what you then have is you understand what your risk is. And what you're going to do, you can use TradingView for this. You can measure, and what I'm giving it is a 0.79% movement. And that's what risk I'm giving it. Okay, that's key. Now, what I try to do is risk no more than 1%. And that's actually ambitious for me. In equities and stocks, I risk 0.5%. Crypto, I like to live dangerously, which I know when I say 1%, people that are trying to make, 20, 30% gains in a day, or, well, let's see if they're around in about a few months. But here's a little trick. And I'm not that great at math. So let's just say, for the sake of argument, that you have a crypto valued account of $10,000 worth of either crypto or US dollars. Now, if you have, that would of course mean that you have, let's say you have 0.2 Bitcoin. You need to figure this out. I know some people, they want to value just their crypto and things like that, but let's we pay our bills in US dollars. I don't know what currency you're in. You may be in something different. I shouldn't be too American centric, but you need to kind of anchor it around something that only devalues by about 2 to 6% per year. I know inflation is making the dollar go to worthless, blah, blah, blah. But for the sake of argument, we're going to use the dollar as our fundamental point. So you have 10,000. Now, if I want to risk 1%, it's really simple. I'm going to do this. I'm going to say, I'm going to divide it by, since it's 1%, I'm going to divide it by 0.79. And what that's going to give me is how big of a position, US dollar nominal value, that I need to put on. So we divide that by Ethereum. So 12,000. And of course, we got 10,000 in our account, but we have a margin account, so we can leverage. So we can use a little bit of leverage. 3887. It's going to be different for this 4087, but I'm just reading the price there. So what that'll tell us is that we need to buy $12,658 worth of Ethereum, which is 3.256 Ethereum. So what we would do to risk 1% in this trade is we would short on margin 3.256 Ethereum with a stop at 41.20. And that's going to give us 1% risk. Now, from there, if we want to be more risky, if we want to risk 2%, well, I mean, that's simple. Okay. Now you're risking 2%. You double it, you times by 2. You want to risk 10%? That's how much Ethereum you would short. And then when your stop hits, your account value will be down 1%. So just to go back through some of the steps, to risk 1%, you take the measurement and the movement of the cryptocurrency. You divide your account dollar value by that amount. You then translate that dollar amount into the currency the cryptocurrency you're shorting. And that's going to be what you're going to short on margin. And that's how I size my risk. That's the steps that I go through with a calculator every time I put something on. And typically what I'm going to shoot for is a 3-to-1. Okay. So that's going to be the bare minimum that I'm looking for in a pullback trade like this. And so, but I'm also, but I'm not just going to say, okay, market, give me this because I want it. It needs to be in line with price action. Okay. And so what I'm going to do is I'm going to look, okay, where's my 3-to-1? Well, my 3-to-1 kind of takes me to the bottom of this range, but really, what do I want? I want a retracement of this rally. If I'm going to put on the risk, I'm going to look for something a little bigger. And so what I like to look for in everything is 50% retracement values. And so this whole rally, if it comes back, I'm going to say it should come back to about 38.62 because that's the 50% retracement. And so that's what I'm going to put it on as. Now, as this trade played out, kind of gave me a little bit of nervousness there. But again, that's all I needed my stop to be. And then it comes down. I have an alert set at the 3-to-1. And what it did was right here at the 3-to-1, it gave a little sign. I didn't really respond to that, but it got down to the 4-to-1. And now you start seeing some hesitation and another manipulation spike, or at least that's the way I read it. So I took off some profit here, safe. So that's a 4-to-1, but I left the rest on because I'm still pretty bearish. And of course, I wake up this morning. I don't trade crypto at night, by the way. It's a bad idea. I learned my lesson about that. And we got back down to our final target. And then, of course, continues on. So you leave on a residual position as well. So would I ever expect in any given trade to make a 10-to-1? No. It just so happened this worked out that way. I mean, part of everything in life is just showing up and being aware of opportunity and not missing it because you have a bias either way. You know, I've missed a lot of bullish trades, honestly, in the months of, in this run up right here. I was still I've been bearish for a while, I admit it. So I've missed a lot of good bullish trades here because of my sentiment. But now, finally, with patience, it's coming around. So what would be the ideal entry point for Ether? Sahel asks. Do you really want my answer? Are you actually ready for it? Are you guys ready for my actual real answer for what my ideal entry point is for Ethereum? So in Bitcoin's history, let me just take off the indicators. See, I've already marked it up for people when they've asked this before. In Bitcoin's history, it has retraced from 2017, it went down from the high to the low 84%. The 2013 went from the high to low 86%. Oh, excuse me, that was another one. In another 2013, it went down 81%. And then way back in 2011, when I first was cutting my teeth on Bitcoin, it went down 93%. I get interested in Bitcoin and Ethereum when they've pulled back about 75%. That's when I start getting interested. Just being honest with you. This is where despair and fear and capitulation come in. I am absolutely not interested in dip buying until you have a real serious washout. It's happened many times. At some point, it will happen again. I'm just being honest with people. I'm trying to save some people some money here. I'm not trying to keep you from being as rich as you want to be by making you miss out by being a bear. I'm just telling you, this is what I've seen over the last decade of crypto. And it doesn't matter if it's crypto. It could be railroad stocks at the turn of the century, the 20th century, the early 1900s. It could be tulip mania from the 1600s. Human optimism goes through these cycles. There's not opportunity here. Now, my tune would change if we solidly broke the high. If this bar right here back in October, let's see if I can draw it really quickly. If October, it's not going to let me do it. If October had been, it's not going to let me do it. If October had been a nice, solid, bullish bar, let's just look at it this way. Here was the 2017 all-time high. Come on. If you had a monthly bar that punched through it and was this solidly bullish, if this happened, or if it does happen, if you have a good, solid, bullish bar in here, then I'm going to change my tune. I'm going to say, yeah, we're probably going to 300,000. If we have a monthly, even a weekly close above that level, a good, solid movement above it, then I will say my tune will change. I'll be like, go nuts. Go nuts. But we didn't get that. We're not getting that. And people were getting bored. People were getting very bored. People were not able to buy their Lamborghinis. And they're getting very, very pissed off. And that's the state of the market right now. Get out of this, these echo chambers that are just telling you what you want to hear, that the moon is incoming. It may very well be. But I'm telling you, if it breaks above the highs, then go nuts. But unless it does that, you have to be patient. Be less concerned about missing a 50% move and more concerned about taking a 50% drop. That's what you should be thinking about. Right now, by not dip buying, you're saving yourself from cutting your thing in half, but only missing out on a 50% move. I know it sounds like 50% is a lot, but it's a lot harder to come back from a drawdown than it is to go up. $800 Ether. Well, let's see. What is the 75% of Ethereum? The 75% of Ethereum is about 1,200. Maybe. I love it. As soon as I start talking, people start leaving the YouTube. Not what they wanted to hear. Not what they wanted to hear. Okay. It's fine. Okay. Got questions for me? Let me know. I'm going to go through my notes here, what I wanted to talk about. Oh, anatomy of a bubble. Yes. And while we're talking about that, I realized, as I was explaining to someone about bubbles, there's a very common uh, diagram that I like this diagram. It very accurately describes all bubbles in some way or form or another, where they all start very boringly, and this is when you really want to get into something, is when it's boring, not when people are talking about it. But it's hard to do because by nature nobody's talking about it. So it takes off. You have the first sell off, which most people think is a bear trap, and then it goes on a parabolic. And most people get into it in this parabolic. When people come and ask me on the live stream about some instrument, usually it's one of two things. It's either here or it's here. It's either in the should I buy it? It's gone up 1,000% phase, or is it coming back? I've lost about 90% phase. That's usually where people tend to ask questions about this investment opportunity to me. And but I've updated this. I've added my own spin to this. I've added my own spin to this. I actually updated this diagram for what I've seen to be this case, and I made some videos about this too. This is the new anatomy of a bubble. So you have the standard bubble. I'm not going to change that. It's very accurate. But you have this phase right here, which comes after the big crash. I'm going to call it the mean malaise, where it's the whole poke it with a stick. Come on, do something mean. And this is where people are really just sitting there hoping. They're smoking the hopium, wanting it to come back. Maybe it will, maybe it won't. But then, almost invariably, you get this breath of new life where the hope is renewed. Hope is kindled. I'm thinking of Lord of the Rings here, like the crescendo of the orchestral music, and everyone thinks that, oh, finally, I'm going to get back up, and then they go through this little mental process in their head where well, if it comes back up to the high, I'll get out. It's always going to be, they're always going to have that anchoring fallacy where they're looking at it to get it, or come back to the point they bought it at, which is typically somewhere in here, around the greed phase, and it never quite gets there. People are not willing. People have been down to maybe 25% of their capital on this failure, and it comes back up and gives them a 50% opportunity to get out, but nobody takes that. No. Then nobody even takes the 75%. They got to get the break even. They have to have that break even, and it always falls short. Okay, not 100%. Almost always falls short. And then I need a name for this phase right here, but it is what it is. It then takes you into the long winter of bag holding. And this can last for years and years and years. And let's look at the one that's really kind of following that pattern. This is, of course, our friend AMC. Now, AMC had its fun during the summer of June. There's your bubble. Let's go to the daily, because what we want to really look at is how this actually plays out. The weekly is not really showing us every single thing about it. Yeah, that's June. There we go. So remember, we've got the sleepy phase. Can I bring this? Let's do this. Oh, we'll bring up mine. So let's look at it. So we have the takeoff, we have the bear trap, the first sell-off, and then the media attention in May, and it goes up, greed and delusion. Then you have that return to normal. This is really the key that I think a lot of people should pay attention to. There's some good, you can't really buy puts because of volatility. A lot of people try to, and I think this year most people learned that's not a really good idea. But this year, through all this, I tried to figure out a way to play these to the downside. I really put a lot of time. I looked at some different options, strategies that would offset time decay and offset volatility. But the problem is when you have these big flying stocks like this, let me see if I can bring it up real quick. Let me use Thinkorswim real quick. So the problem with, wait a minute, I'm looking at the wrong stock here. This isn't AMC. This is Amur Minerals Corporation. Well, there you go. It just goes to show how the pattern does play out exactly. Let's actually bring up AMC. Hold on. AMC. Why are you doing this? AMC Entertainment. That just goes to show you how the pattern is just so incredibly regular that I can pull up any stock and it looks the same. Oh, you know what? I bet people were buying it because they thought it was AMC, the movie company. Oh, that's funny. That's funny. That is hilarious. Yeah, we'll look at GME too. Hold on. Okay. Okay. Because I knew I knew it didn't look exactly like I remember. Yeah, because you had this period right here that I was that's what I was trying to talk about, was this period in here where you fail to make a new high. That's that return to normal phase right there. And you really can't, I mean, this right here is when it fails to do this and you start making this run, you got to get out. I mean, come on. But people don't. But if you're smart and you do this long enough, you'll know if it fails to make that high, it's not coming back, man. Not. This is what. Okay, so this is AMC on Thinkorswim. Down here is a indicator I wrote up that helps me see implied volatility. So the problem here when you get up to this point is IV is like 370%. That's really high. Typical IV on most stocks are going to be in the double digits. They're not going to be in the triple digits. And so if you try to buy options at any point in here, if you try to buy puts, the implied volatility has them so inflated that you're overpaying for them. And then as IV declines over time, even if this is going in your favor, you don't make any money on the puts. You just, because the overall value of options is going down because IV is deflating. And so you just can't make any money on the put side. Yeah. Hit me up on Discord. I'll send it to you for Thinkorswim. Thinkorswim's a great platform, by the way. If you're a retail trader, you need to get it. You may even be able to do it without any account. It's best analytics for options out there. Can I share the theory image? Sure. Well, the theory image, that's on my computer. I'll put it here. Let's see. Yeah. I tell you what. Afterwards, can I share the theory image, the image that to compare the candles? You know what? What I'm going to do is I literally made this last thing in about the last 20 minutes in my show prep. So let me publish a Trading View thing with this a little better, more polished, and yeah, I'll put it up. Yeah, take a screenshot if you want to. It's just something I drew. You can do a Google search for anatomy of a bubble to get the actual thing. But I think it's very important to have this thing right here. And let's circle back to Bitcoin actually, because again, there have been. I actually want to go back to. Let's see. Yeah, we'll go back to this right here. Bitcoin had one of these as well. It's very interesting to go back and look at Bitcoin's history, long-term ancient history, ancient 2019, pre-pandemic, in the before times. It had some interesting things. This is what a bear market in Bitcoin looked like before. Slow bleed off. Believe it or not, Bitcoin was once at 3,000. And at the bottom of the pandemic in March, it got down to 5K. But again, you still had that same breadth of life. Now, the long winter of bag holding, as I said, it can last X amount of time, and it can come back eventually. But that's why I want people to be very aware of like this common theme. Bitcoin is different. But in all of these stocks, let's see, what is share me ask me about some cryptocurrency shitcoin, something that's mooned. Let's look at it. Just challenge me. VR. What's VR? Victory Resources? Crow. Okay, yeah, you asked about, everybody's asking about Crow. I wonder what Crow is going to look like when I bring it up. What do you think Crow is going to look like? Take a guess. Something that's not mooning anymore. All right, let's look at it. So with anything, let's measure it out. Either this launched or this started trading on coin. Where's it been trading longest? I love looking at anything, but I need data to do my analysis. Okay, so where's it been trading the longest? Okay, there we go. Okay, so now we have some more data here. Okay, all right. So from the point it launched, okay, I'm going to measure it out. Being totally objective here for you guys. When you got to this point right here, that's a buy. I'm okay with that because let me segue for a second. Sand, it had a similar type of instance. See, is it Sand or was it Mana? I am actually okay. I think it was Mana. It was one of these that I was watching. No, it was Sand. It was a really perfect hit. Yeah, there we go. So Sand was the one I was watching, and my friends, unfortunately, my friends told me about it here in mid-November when I was playing some games with them. But in this move up right here with Sand, it had a big bull run. It pulls back to the 50% retracement. As a trader, that's what I'm going to look for. That's going to be a buy. You wait for the full 50% and you buy it. And if it holds it, you're good. And you can look for something like this. That's a trade. Now let's go back to CRO. So Crow did the same thing. Crow came back to the 50% retracement. People bought it up. There's a lot of buying there. You can see it in the price action. At this point, you really have, I won't say you need to be out at this point, but a bar closing below it, that's your first warning sign. You get a little bit of hope, gets above it. If you had your stop below here, that's fine. That's good. That's below the selling action, but you got to be disciplined. At this point now, what you have going on is you have basically a breach. It's coming back to retest it as resistance, and it's holding it. So if you're in this, if you're long, you got to get out at 47. Oh man. I mean, trade your plan. But if I was in this, if I was long, I'd actually be okay staying long as it holds that spike. You don't need to bag hold beyond that. Could be wrong, could go on to the moon after this point. But like I said, you need to look at stuff like this, where when it takes your entry, when it takes your order, when you buy it, if it's going to work, it should work quickly. That's really the thing. Like, think about you. No matter if you've been trading long enough, you've had winners. Okay, I mean, everybody doesn't lose all the time. You may think you do, but you have winners. Think about your winners. Think about how easy they seemed. Think about how they just worked. Okay. Don't think about those ones that you back held and they came back 2 years later. No, not those. Think about the trades that you entered and that 1 out of 10 that you got that actually went the way you wanted to and you were happy. They don't give you much reason for concern. This right here, if you would have taken this as a trade on sand, if you buy it at the 50%, maybe play it up for that. I like to look for the 3-to-1. It never really gave you much concern. You take a little bit of profit and you hold on to it for the rest of the thing. And it still hasn't come back to your stop that you had at 155. That's a good trade. That's a good long. That's what you need to be in. This bar is key. I mean, this right here, the price action here. Let me just hide this. Let's go back. Oh, I want to see it. Hang on. Let's just dig. Let's look under the hood. Let's look at the 1 hour. Yeah. This right here, that's where you know people got washed out. And it's just kind of holding within this range right here. Yeah, you don't need to bag hold beyond that point. It just anything can happen, quote unquote, but that's your defining line right below that low of 47. You're okay until 47. And then you run into some really bad territory. So that would be Crow, very simply. Can I please see Mana Gala? Do I actually think I added? I have Gala on my alert list. It actually gave a thing. Let's see. To the daily. Give me more data. Did it just start trading in November? Is this one of these metaverse? They all did that December spike, didn't they? You know, just like Bitcoin and Ethereum, that December 4th spike, man, it's going to be really, really important. It's going to be really, really important. Again, just kind of hanging out. That's where your stops need to be. It's those liquidation lows. It's very consistent across the board. Mana. Every single crypto has spiked there. And man, it's trying to get down there. This weekend, I really expect the price action to continue inching down to this low. Okay. And there's a lot of stops below that low. There's a lot of stop loss orders. That's where mine would be, and that's okay. Again, we talked earlier at the beginning of the live stream about how, you know, the market makers and the whales, they manipulate things. They could very well be trying to trick some people and take out stops below that level. But really and truly, if this was going to work, it should have gone. And even if something does screw you over, you can get back in. The problem is staying in and letting something just deplete away your capital. Then you don't have anything to trade with. You just can't do that. So let's keep things moving on. I wanted to look at the Ethereum Bitcoin cross. So this is something that I noted in a post earlier this week. Again, starting in the middle of November, you had this run up where Ethereum really took over. And again, we looked at Ethereum and Bitcoin on the daily Ichimoku. Ethereum is more bullish than Bitcoin. It is. And the Ethereum Bitcoin cross on this jobs report, it had a spike, like I like to see. It was too quick to make a trade on. Was it the 2 hour or the 4 hour? Yeah, it was the 4 hour. But it comes at what I consider to be a beautiful, beautiful level. And that level is, of course, a past major high and a 50% retracement. So far, this trade, as it were, off this 50% retracement on the Ethereum Bitcoin cross is working. This I would expect to get up to retest the high. Had a little dip today, but you can see it's still holding. Of course, if you're structuring this trade, long there, stop there, 3 to 1's very easily there. To play it to the high would be a good risk reward. Let's just say someone was looking to buy at this point. I would not recommend it because your risk reward is not that high at this point. Only 0.72. That's not the kind I like. But from a probability standpoint, if you can find something, if we get some movement over the weekend, this is what I would be actually bullish on, is the actual cross. I'm bearish, of course, on crypto in general, but these crosses, because they both involve crypto, there can be a meaningful divergence. Another thing that I've been looking for here is Litecoin Bitcoin. So the 0.003 level is a level that goes back all the way to 2013, Litecoin's inception. And it held it back in 2017. I'm not sure if I trust this data, but we'll go with it. And it's been really just kind of inching towards it all this time. If it breaks it, then that's just not good. But you know what? It's worth it to play the rise off this level. It is off this 0.3 level, Litecoin Bitcoin cross. I like the risk reward here. As you see, I've already got it drawn up because maybe I'm in it. So we'll see. Really stop probably would be below that, but I'm playing a little tighter. So again, bearish on crypto in general, but that doesn't mean there's not opportunity in the actual crosses. Now, I know a lot of people like to look at these crosses between different letters that I've never heard of before. I stick with the majors just because I don't want to have a watch list that's 100 long. And you can see my watch list right here. These are the ones I look at, and pretty much in the priority that you see them. So if you're looking for opportunity, look at some of these crosses, because they can have some significant movement. Even if you want to be bullish on crypto, sometimes you can see some really big movements. I mean, in the crosses themselves. Oh, don't forget Tesla. Yes. So let me answer Tesla. Yes, I will talk about LCID. So I'm both long Tesla and LCID. So Tesla. So I've been looking to grab Tesla for a while, as anyone has, since it had. I'll just start over. So you had this big run up. I'm not going to buy into this. Here is that problem, that failure to reach the actual high, to actually break that high and make a new high. I know I noted it at the time. That's dangerous. And sure enough, since this failure back in November, you've seen this happen. And so now it's going to go through a correction. I mean, it's very, very common and very simple. If something doesn't break the high, if people aren't buying this breakout, if people aren't really optimistic and bullish, that's a warning sign. That's actually a reason. That's actually things you can short. Help me out. What was that? Neo was that other EV company. This was a trade from, was it earlier this year? Yeah, this was a short that I put on earlier this year when we failed to do that break of the high back there. So what I look for, still got it annotated up, is you look for that reaction level and you take a short based on that failure. This happens all the time. All the time. So failure to break the high, you got a second one here, and then there comes the correction. So it was no wonder when this happened what I was looking for in Tesla. Now, the question is, when do you buy in? So, of course, I'm going to look for the 50% retracement. I really want to go to the launch level. I mean, really, it's about 900. So I'm jumping it a little bit. And the reason I did that this past week was because we had these spikes happen. Now, it's really playing games here. It really is. And I got to say, it could be something that bites me. I'll admit it. But I myself and other people that wanted to be long Tesla, that they put me in charge of some of their investing. They want to be long Tesla, so this was the first opportunity. I'm not opposed to cutting it if it comes down, because here's what's going to happen. Well, anything can happen. But what I think would probably most likely happen is if it does break through these stops, it's going to come down to the 900 level. But just as you saw when we looked at sand and everything else, it doesn't really stop on the penny. It's going to start messing around in this area before maybe it finally does have a chance to come back up. And if you start getting into this territory like this, you get into a very uncomfortable risk situation. I'd rather not sit through. As a trader, I'm not going to. I'd rather cut it and wait for another opportunity to get back in and just mark it off as a thing in my log that probably should have waited to the 50% retracement. That's fine. Be a lesson. So it needs to hold. It needs to open Monday up. Growth has been really, really, really hammered in these last few weeks. So Tesla is something that I'm in, and I'm watching it very, very closely. All growth. I mean, ARK, of course, has been doing the same thing. Growth has been really playing a lot of these manipulation games. I got into ARK, was it the 6th? I think it was a 2-hour. Yeah, so got into ARK, and I've got my stop at 88.31. This is, of course, the growth innovation, which is growth ETF by Kathy Wood. It's playing games, but so far it hasn't broken that low. So I'm going to diamond hand it, as it were, but I'll go straight paper hands if it breaks that low. LCID is another one where it has also played games with the stop in here. The reason I like this was because it did actually get to its proper 50% level. That's why I'm long from this point here. And I'm watching it very, very closely. It really needs to hold this range. It's bloop, bloop. It's hit it a couple of times. It's holding it, but if it starts breaking through the range, I'm out. I mean, just off the top of my head, here's a trade from earlier this year. Just kind of one of these examples. Actually, no, it was Lockheed Martin. So Lockheed Martin, I still got it marked up. Here's an example of where not following your rules will play games with you. This was, as you see, I saw a spike here and got long this stock on this, and I got out right here. Did not give it much room. And glad I didn't, because even though in the days afterwards, it sort of gave me a little bit of a, oh, look, you should have, no. This, again, is one of those very uncomfortable risk situations. And even though they had a big move up on earnings, I'd still be at a worse position than getting out back here. And so that's why I don't want to give it much room. I'm not worried about something coming back on me and making me feel like I made a mistake. I'm on to the next trade. There's plenty of winners out there. So for the growth of LCID, so, wow, message retracted on everything. I guess he deleted all his messages. For the I don't know, man. There is a difference between perceived value and intrinsic value that I've talked about this week with some people. And perceived value is going to be what people are willing to pay for the stock. Intrinsic value is going to be the fundamentals. And as far as I know, the fundamentals of these EV companies are not very good. EV is entirely speculative. Who's going to win the game? Is it going to be Tesla that's going to maintain its market dominance? Is it going to be companies like Rivian that's going to take it away from them? Is it going to be Lucid? Who's going to win? Nobody knows. You can't really make that comparison. It's all speculation at this point. Ford, exactly. Yeah. Who's going to win? People, it's a race, it's a horse race right now, and people are placing their bets. I'll tell you one thing, they aren't all going to win. I think people are waiting for value to come back. No, you're fine. You're fine. I just didn't know if you wanted privacy. It's going to be if you want the Discord, it's going to be in the signature, or I didn't post it on this live stream, but look on some of my other live streams on my channel. I'll post it later, or just send me a private message or something like that. So until things like balance sheets, I mean, look at Ford. So Ford, on their last earnings, they let's see, where are their actually it's not that earnings that I remember. I can't really read this. There was an earnings cycle in Ford, was it this year, where their revenue and earnings were down, but the stock went up afterwards. If I know correctly, what is? Let's see if this will come up. Yeah. So yeah. Okay. Here you go. The net income for Ford has been negative for a very long time. It's actually coming back to positive here. Okay. But the stock is going up. So what do fundamentals really matter? They don't. Not right now. I mean, eventually, I think that fundamentals will matter to stocks. Warren Buffett style investing may come back in favor, but right now it's all speculation on growth, and it's been getting hit. So, question: what about crypto? What do you mean? Well, what most of the live stream was about was crypto. What crypto in particular are you talking about? Let me go through my list here. Let's see. Oh, we're actually coming past 5 o'clock, so there's a lot of things I didn't get to talk to about. Let's try to run through these. Disney. My sister has a nephew, or my nephew is through my sister, and she has made sure that you tell them all that he's got enough toys. Don't buy him any toys. So what I've done is I've had them set up a custodial account, and I've been putting money into stocks that hopefully he will appreciate, or I don't know, he may be rebellious and not care when he turns 18. But I have been looking for Disney. Disney has, at least in this December, come back to a very, very nice level. Hasn't quite hit the 50% retracement of the low from COVID, but this is a 15-year play for me, so I don't particularly care. But what I do like is that since you had this December low, you came back to this level in here. This is a buy for me. So, not recommending anything unless you're setting up something. But instead of buying presents, Disney, I think, is a good long-term thing. Because here's the thing: is Disney going to be around in 10 years? They've got Marvel, they've got Star Wars, they got their parks, they've got streaming, they got oodles of content that kids are going to want to watch. It's going to be around for a while. It's a solid bet, even though it's been down. So I like Disney for that. What else? I don't think I have time to talk about the RSP and the SPY, unfortunately. Or Ichimoku numbers and which one works well. Sector rotation, I do want to talk on, though. I do want to talk. So let's do a quick look at the ETFs, because what has been very interesting over the last few has been the Well, what's been a winner this week? You've had some really well. That's not a good example. What was it? What was the big winner this week? I know that Philip Morris has been going nuts. Another one in my portfolio I noticed today. Waste Man. Oh, actually, that was down. Let me look at my thing. Today's probably not the best. I wish I had a weekly. Um, but value and dividend plays. SO. Yeah. So while the market has been very, very tenuous and growth has been faltering, the winners have been the flight to safety, the value plays, the dividends, the utilities, the consumer staples, things like Procter and Gamble. Hey, yeah, today had it, but this week, while everything was being very tenuous, you had a lot of bullish action on these. Procter and Gamble, J&J, everything kind of had a sell off today, but these were kind of the winners for this last week when everything else was kind of faltering. And really, of course, you had Apple dragging down the whole market because this is what happens when you have one stock overweighted in the S&P 500 index. Makes the index look great when it's going up, but you've had to sell off an Apple and it's really driving the market down. The index is down, except for the better seen today. Actually, let's bring up the comparison. There we go. So here is your S&P futures. Here is your Russell, your small cap 2000. And of course, just to demonstrate the similarity, I've got Bitcoin and Ethereum down here. And so the Russell actually held its gains. The small caps actually held their gains. Look at that little spike there this morning at 9:30. I like that. So that's been interesting. And of course, what does the Russell 2000 not have? Apple. What's going down? Apple. So that's kind of interesting to say. But let's go back and so let's look at some of these things. Let's bring up an Ichimoku and just go run through these really quick. So XLY, which is the consumer discretionary. I like this. I really like this actually. This is something to watch for Monday. Pull it back to the cloud, which is the 50%. You're going to notice this a lot as we go through these. There's a lot of these major names that are doing Comcast. Oh, weekly. Yeah, the weeklies. I mean, really, from back in 2020 to here, we had this huge bullish off COVID low. And what things have done in the last quarter four is they've done a pullback. And again, going on Ichimoku theory and whatnot, it's touching the cloud, but where's momentum? So let's take a look at some of these on the daily. So again, we're at the cloud. Momentum's pretty far behind. This is the healthcare. Again, kind of a safe bet. That's not having any problems. Utilities, doing well as this sell-off happened. Real estate, doing well. Consumer staples, doing well. Tech, faltering. We knew that. That's Apple. Industrial, going nowhere. Financials, going nowhere. Energy, in the cloud. Telecommunication, AT&T and the such. I think AT&T actually had a pretty big rally. Yeah, I had a rally day, but man, oof, gross. I think that Verizon is kind of what is T-Mobile? T-Mus? T-Mus? Yeah, they all look pretty much the same. Yeah, not good. Materials, Holden and TLT. This was actually a trade that I took earlier this week. I'm looking at it. Was it the 2 hour? It had a spike here on the 9th. So I guess that was last week, actually. Yeah, last Thursday. I got into it here. So I got to stop below here. TLT, I'm looking bonds to basically retest the top there. Silver has been talked about a lot. Man, some of the people that are the most diehard outside of crypto, or even more so than crypto, are silver bugs. I hope the best for them. They think it's going to rally. I don't know. You would think in a high inflation, in a super high inflation fear market, that these precious metals would be going crazy, wouldn't you? You would think that, but they're not. All right. I'm going to start wrapping things up right now. Anything else people got to talk about? Let's go through the chat. Make sure. Let's see. Ask him about Tesla exercising options. 12 billion or something. Oh, Elon? So the fact that it's known that Elon, let's bring it back up. The fact that it's known that Elon is doing what he's doing means that it's not really a shock to the market. I'm not really sure the reasons. If I understand, and don't quote me on this, he has to exercise these options as part of his contract. So they've known about this for months or years in advance. So it's not that he just decided to wake up in some kind of stupor and tweet that he was selling and sell it. I think it's just part of the whole thing. Is it part of the drawdown? I mean, as my friend the financial advisor told me, every time somebody's selling, somebody's buying. There's two sides to a trade. So while he's selling his stock, somebody's buying it. So it is what it is. Yeah, Verizon, it's going. Yeah. Okay. So last couple. Okay, EGLD. All right, let's see. I never heard of this before. Let's take a look at it. Market cap ELG. Is this gold? Is this gold market cap, or is it? What is this? You need to tell me what this is. Market cap ELGD. Elrond. Is this a cryptocurrency? Hold on. EGD. Hey, thanks, TradingView. Appreciate y'all. I really love to talk about how great the platform is. Try to get people to pay for the premium, but I mean, it's great. I use it for all the alerts, but hey, man, some people are cheap. They don't want to invest in their trading. Elrond blockchain. What's the symbol? Can you post a symbol in the chat? Bristol Meyer. Oh, I need to talk about something. Hanging out, but I'm actually LLY is a big holding of mine. It's been for a while. What do we have here? This week, this is a weekly chart. This week just closed. What do we have here? Bit of a warning sign. I'm still long it. It's one of my long-term, like kind of retirement level long terms. But I'm going to be watching this very closely. This is a failed breakout. Might give it one more week to see. But this kind of price action right here, a failure to, this is exactly what I was talking about with other things. I would be remiss to point out that another one of my long terms that I've been holding on to for a while, still holding on to it, was PGNY. I talked about it at the time, where on the weekly, it actually gave you 2 bars worth of warning that it was failing to break out. I mean, watch for these things. These are very, very common. I mean, you don't need to do Fibonacci's. You don't need to do moving averages. You don't need to do RSI. Bars, candlestick closes. They can be a tremendous warning sign. So LLY, I'm not going to close and take the capital gains hit on this one. I'm okay to ride for the long term, but that doesn't mean that I'm not going to be really, really aware of my alerts coming through on this to set up some shorts if it is actually failing. So yeah, BMY, I don't really have an opinion on because I don't have any BMY. LLY is my pharmaceutical play that I'm in. But yeah, it gave us this week a warning sign. All right. EGLUSET. Another one. That's going to go on the soundboard. I'm going to have the what's that DJ Khaled. Another one. It's another one of these that goes up. Simple price action. I'm going to key off this right here. Boop, boop. Oh, this is a weekly. Okay, let's go down to daily. There's your December 4th spike. There it is. Let's measure the move from the launch point down to here. It should have held here. It should have keyed off of this right here. And your major warning signs are this, boom, and then boom. This 306 right here. You even had the bar spike below it and then close, but you've had two attempts, actually three, and then this final attempt right here, and it's held that level. If it breaks below this, that's bad. I would not want to be long this myself. And the good thing about it is, if you go ahead and nix it at this point, where can you get back long? The break of this high. So you can save yourself a lot of headache just waiting for, you can give up about 30%. No, it sounds like a lot, but I mean, if this is going to be like anything else, you don't want this thing to really come all the way back on you. If this thing is a bubble failing, you don't want that to happen. But you know that if it can break above where it's been failing so far, clean this up. I mean, you get your price action here where there's a lot of buying and selling, and then that's just where people couldn't conquer it. The buyers couldn't win. But if they do get above it, that would be a very bullish sign. So you know where you need to be and where you don't need to be. That's the key. You're in this range right now, and you got to play it in that. You got to play a breakout of that range. That's what's going to tell you where this thing's going to go. 354 and 216. Very simply. Very simply. Do I think of shorting? Can we short it? As I said earlier, I only worry about the blue chips of crypto. Bitcoin, Ethereum, Monero, Cardano. Not really Ethereum Classic. It's just still there. Maybe Litecoin. I watch these because other people do. I don't really trade these. And I do look at the crosses of the three. These Bitcoin, Ethereum, Monero are the only three I care about. I used to care about Litecoin, not so much anymore. These are the only three that I care about. The only things I see as having use cases, honestly. If something else comes about that gets my attention, like I added the metaverse ones because that is the metaverse stuff is something I'm very interested in because I've been a gamer all my life. And so if they actually do come up with some kind of virtual MMORPG based on these tokens where having a lot of these tokens, being able to buy a fancy sword to slay the dragon 0.5 seconds faster than your guildmate, I'm long the metaverse. If something like that comes out, I'm not really in a rush to get into the metaverse coins until you have a major hit game like that, like a World of Warcraft or a Final Fantasy type game on these platforms. I'm going to wait until something like that happens. At that point, I'm going to become a billionaire, at least in the game money. It's just I've been training all my life for it. It's just inevitability. But until that happens, I'm just watching them. But like I said, do I know how to answer your question? I don't know how to short Elrond because I've honestly never looked at it. I don't know what platforms it's on. It's not on that much. If it's not on Bitfinex or FTX, it's never come across my radar. I have no idea. You should take a look at of a real metaverse VR Victoria VR headset. It pumped 23,000% and kept that extension. Let's look at it. VR USDT. I'm assuming this is it. Okay. Understand something. I'm not really looking for the 1,000%. I mean, that'd be nice. I'd love to catch. Who wouldn't want 1,000% things? I don't really need to catch these 1,000% things, so they don't really interest me in the gains. What I'm interested in as an art form is trading and looking for these particular setups that fit my strategy. So I'm remiss that I miss a lot of these big 1,000% moves. I hope everyone catches them and gets fabulously wealthy. But the only thing, like I said, I'm going to be interested in is use cases. Bitcoin has a first mover advantage. It is Bitcoin. Everyone knows it. Ethereum, NFTs, DeFi, all trace back to Ethereum. It has a great use case. Monero, it is absolutely focused on privacy and decentralization above all else. That is the use case. That's the primary intrinsic value of cryptocurrency is decentralization. So those three are the only three that I want to actually have. Everything else is pretty fun, and maybe something becomes a very good use case. But let's close on this narrative note. Let's close on this. And I made this point before. At dinner this week, I had a conversation about Amazon. Let's go back. Now, I'm too young. I was in high school at the time to remember the .com crash. I'm out of water. No, I'm not. Let me get a drink of water before I go into this. Go into a little final closing diatribe. Everything.com, everything internet went nuts back in 98 to 99. 2,600% increase. Sound familiar? And then when it all came crashing down from its high, Amazon, which now rules the world, was down 90, well, no, more than that. From its high, 94% drawdown. Wow. 20 years later, hey, a spike. 20 years later, it rules the world. But nobody knew it at the time. It was the winner. And what we talked about was you can go back and look at interviews of Bezos. If I'd remembered or thought I was going to talk about this, I would have brought it up. But there is an interview where he talks about his strategy back in the late 90s. This was maybe even before the big run up. But there were specific things that Jeff Bezos did or understood before anyone else. It's not an accident why he won, why Amazon won. He chose books as a product to sell on the internet. The fact is, in the late 90s, selling things on the internet, everyone thought was the future. Everyone was correct, but it wasn't the future yet. There was not infrastructure for it. People were not used to it enough. People still wanted to go to stores and see the merchandise in the stores. They wanted to try on the clothes. They wanted to browse. They wanted to, touch. They wanted to feel before they bought it. They were not ready for the internet. And plus, the images on the screen, the graphics were, like 8-bit. They weren't. You couldn't shop there. Was not the same world. But books, they're non-perishable. They are very versatile. They're not fragile. They're not too heavy. They can be packaged pretty efficiently. They also, again, they're not something people need to try on. They're people that they read about it and they're like, oh, I want to read that book. They don't need to see much about it. And so books are the perfect choice for what to pick to sell as a niche to get traction. Books, it was not accident that he chose to sell books. Another part of his strategy was that he put his warehouses right beside FedEx and UPS warehouses so that he could lower his shipping costs. That was the big detriment, was shipping cost. And it still has been for all these years. I don't think Amazon turned a profit until maybe like a few years ago. When Amazon Prime launched with free shipping, they lost billions of dollars, but they wanted to grow. And people were willing to invest the money to actually make that happen. They were actually willing to put their money into long-term venture capital to see what would happen. Even though they weren't turning a profit, they were willing to play the growth story. And now it's one of the great success stories of our time. But it was no accident. They picked a use case, and it took a long time to play out. Now, I hear this meme a lot. People talk about, I'm a long-term holder of cryptocurrency. I'm in it for the 5 to 10 year. Okay, good. That's fine. But if you're going to be in for the 5 to 10 year period, you need to understand what a 5 to 10 year period can look like. All these cryptocurrencies that you see are very much like the .coms, pets.com, everything else. There's going to be a winner. 10, 20. Cryptocurrency is going to change the way we do things. There's a lot of talk of Web 3.0, the decentralized internet, etc., where people are going to have a stake in these platforms. All good ideas. These are all fantastic ideas. If you study what they're doing, what these platforms are doing, if you study their use cases and you find something that you believe in, you're like, this is going to change things. They're doing something a different way. This actually matters. This actually has traction. If you find something like that and you hold on to it, even if it goes down 90%, in the future, you can be able to get this. But there's a couple of things from here to here. Number one, to get 31,000% returns from the bottom. Number one, this took 20 years, and it didn't really start taking off until the last few. The other takeaway is you didn't necessarily need to be in at $11 to make money now, did you? You could have bought in 2018. You could have bought in 2019. You could have bought at any point in this period, and you would have made a good amount of money. You didn't need to hold on to it all those years ago. There will be opportunity in these cryptocurrencies. So whatever percent gains that these cryptocurrencies are doing right now, I'm not that concerned about, because it's all paper profits. It's all fleeting. That doesn't tell me anything about the long-term prospects. I mean, it's fun if you want to be a gambler, but I'm not a gambler. You need to do the research. You need to figure out, why am I holding this? Am I willing to hold it for this many years? And then bear in mind that you don't have to be right now. You can sit back and you can watch. I know it's boring. I know it's not as fun, but you can sit back and you can watch which of these projects, which of these cryptocurrencies are actually making real intrinsic value moves, not perceived value. Perceived value is the price. Intrinsic value moves. Things that are actually going to change things. That's why I said about Bitcoin. Bitcoin is Bitcoin. It is a deflationary. Everyone recognizes it. People want to hold it. It's the store of value. Ethereum, all these projects are based on Ethereum. And Monero, it's the privacy coin. If you can show me that Litecoin or Solana has some revolutionary things going on, then that's fine. But I don't see, maybe I'm just ignorant. Maybe I don't follow it enough. Maybe you do, but that's your edge. That's your edge, and you can exploit that. I'm watching the metaverse. That's something I can believe in. I can believe in the metaverse because virtual realities, virtual worlds, and people buying and selling things in virtual worlds, I've been doing that since 2000, 2005, 2004, 2003, playing games like WoW and EverQuest. Second Life, people used to talk about it all the time, people selling stuff in that game. That's a real case. There's real money there to be made. So that's why I'm interested in the metaverse stuff. But I'm still waiting to see what plays out, which one's the winner. Because 99% of these cryptocurrencies are going to go to nothing. But there's going to be winners. So just bear that in mind. That's what I think is truth. That's the wisdom I have. Could be wrong. Elron could go and change the world 10 years from now, and you need to buy it now or you're going to not make just my opinion, just what I've seen. Thanks for joining me. I appreciate everybody on my Discord. Appreciate people on the YouTube and on TradingView. Love the platform. We'll see you guys next week. Maybe I'll even start streaming some of these FOMCs. Just watch and see. So have a good